Good morning or afternoon, depending on where you are in this country. I'd like to welcome you to our webinar on how your business insurance could be crushing your cash flow and how to fix it. My name is Ron Feldman. I'm with ApplePie Capital. We're hosting this on behalf of Intrepid Direct Insurance. And our goal is to educate you, to make you a smarter insurance buyer. And to let you know kind of the offerings that you should be looking at and where the value in your insurance is and how financing your insurance premiums can help your cash flow. A couple of housekeeping things. If you have questions during this presentation, please use the Q&A function in Zoom. You can type your questions in. We have everyone muted because we don't want to hear with everyone at home, dogs barking and lawnmowers. Secondly, we will be sending a recording of this to everyone. If you have partners at the end, we'll be sending you a link to this webinar. So without any further ado, I'm going to introduce my co-speakers. If I can get this PowerPoint to work right, there we go. Ed Fitzgerl, who's the general manager of Intrepid Direct Insurance, and he's our insurance expert. And Laura Bradley, who is the restaurant specialist at Intrepid. And more importantly, or equally as important, is a recovering QSR franchisee. Can I get you each to give us a 30-second intro? Ed, why don't we start with you?
Okay. Yeah. Thanks again for having me, Ron. Good to talk to you again. Like you said, I'm the GM of Franchise Solutions at Intrepid Direct Insurance. We are a direct provider of business insurance for franchisees. We're franchise focused. It's 99% of what we do on a daily basis. Being direct means we eliminate the middleman, so we do not work with agents or brokers. So a non-traditional approach there. I've been in insurance for, I think, almost 25 years. 17 of those years I've spent on the direct side. So I'm very familiar with the process. I'm a big fan of the speed, the dedicated service, and the fewer touch points and how efficient the direct model can be.
Okay, great. And Laura?
Sure. Thanks for having us. Really appreciate everyone's time today. I know as a former franchisee, lunch hours are kind of a busy time for you to sneak away and talk about insurance. As Ron mentioned, I'm a former QSR franchisee out of the Midwest. I did Burger King and Yum Brands, primarily Taco Bell and KFC. But as you know, a lot of those are co-branded, so I've had some of the other brands as well. I was fortunate enough to have an operating partner that was in front of the house that kept the pencil sharp there, and my job was behind the house or above the store, making sure that all of our financing and leases, insurance and things like that stayed in line for our P&L.
Great, thank you. And I'm just here to facilitate the content and try and get some value over to all of you on the phone. To set a little grounding to see where we are, these are just some, I don't want to say assumptions, these are some facts. You all buy insurance, you don't have a choice. Both financially, you don't have a choice, and your franchisor is telling you that you need to have it. You may or may not have expertise in it. Some of you may have gotten some expertise in it, but when you started, you certainly didn't have it. And the thing I see is that insurance is a commodity. That's what I hear from people, and it really isn't. Who you have matters mostly when you have a claim. Most of you are buying your insurance through brokers, and they're earning a portion of your premium. And many times you finance those premiums over time, and that's almost never free. Ed, can you jump in and just give a little color to one or two of these bullets?
Yeah, and I think we'll probably lean on Laura a little bit here for some real life examples. But the ones that stick out to me is, you have to have it. Brokers are, just going back to the beginning. Most of these limits are going to be mandated by your franchisor. We all know what you have to have. Who provides that coverage is especially important. You know, when you have a claim, when you need something fast, it's very important to make sure you have a dedicated provider there. Brokers are middle people. You know, they take a portion of your premium for the service they provide. And then again, the financing, like you mentioned, it's not free. Whether you're financing your premium or you're paying a fee for monthly installments, there's going to be some dollars associated with that most of the time.
Yeah, and I would just add on there, Ed, is, and for everybody listening, is, you know, you guys have to manage to a P&L all the time, and insurance is probably not one of the line items that stick out for you as one to investigate or to challenge, because it's part of what we have to have in order to run our operations. And so one of the things that we would hope that you get out of this little nugget is start looking at that and start challenging, you know, your insurance and things like that, and making sure that the carrier that you have is going to be around, has financial integrity. Sometimes the cheapest price isn't always the best answer if they're not there to pay a claim for you or things like that, or defend you when you have claims brought against you. So looking for you to have claim reviews, making sure you're in the loop on major claims that may happen. Being a good partner for you behind the scenes is really, really important for you to manage your insurance, take control of it.
Great points and great color. Thank you. So moving along, this is the declarations page. It's kind of your dashboard. Laura, can you kind of take us through it and kind of let people know what they should be looking for?
Sure, absolutely. This page probably looks familiar to most everybody on this call, and the reason is because you see it at home when your homeowner's insurance comes, when your auto insurance comes. Same thing for your business, and they call it a declarations page or a deck page, you might hear referred to, and it is just really just a snapshot of some of the basic information: your name, mailing address, your policy number, and things like that, and what coverages you have, and what cost to you it is. So it's a very quick snapshot for you to look at. The one thing that we'd like to focus on this call, in order to help you guys understand your insurance more going forward and how to take control over it, is number 4 there, the policy period. It's also called the effective date. Pretty self-explanatory. It tells you the timeline that you're covered. It's typically 12 months that you have coverage for. And what we'd like to urge you guys to start doing is, and I didn't do this at the beginning when I was a franchisee, when I first started out, I at the last minute, I'd get the quotes in and you're racing around trying to make a decision. I urge you to take control over this and to start shopping ahead of this by at least 60 days. If you're a small to medium franchisee, if you're a larger franchisee, probably about 90 days out. And it's okay to set a timeline that says, hey, I want to make my decision by, you know, December 15th for a January 1st renewal. You don't have to let them dictate to you, you know, at the 11th hour or at midnight, you know, of having you to make a decision. So I didn't learn this until a couple of years into it, and it was always a last minute games and things like that. And it's not very fun, and you kind of feel like if you're not even part of the process until the end, and you get a huge increase, you have no options then to go out and shop it somewhere else. So the sooner you can do this, get ahead of it, the better off you're going to be.
Great, thanks, Laura. And Ed, what kind of a pointer would you throw at this one?
Really, I'd echo what Laura talked about. You know, you see up there on the named insured, an address. You want to make sure that's correct. If you have other locations, which most people will, those will be buried within the policy, but it's important to go find those, make sure those are correct. And like she said, you want to be starting this process 60, 90, even 120 days out. Start talking to your provider, have the conversation, see what other options are out there, maybe talk to some fellow franchisees, hit the Facebook page, you know, get advice from them. But you know, if you're not going to do it every year, I would certainly look at doing it every 2 years.
And is there any prohibition against doing it in the middle of your policy year? Is there any financial penalty for switching in the middle of a policy?
Good question. We get that a lot. In today's world, not so much. It doesn't mean there can't be. Every situation is going to be a little bit different, but I'd say 9 times out of 10, just with our experience, we're able to switch midterm without any penalties on their part.
Great, thank you. Move along and figure out what affects premiums. Ed, why don't you walk us through this?
Yeah, the number one question, insurance. What am I paying for, right? Obviously, limits are important. The FDD is going to reflect those limits. There's going to be some must-haves, and there's going to be some, depending on the size of your operation, there might be some others you're going to add on. You just want to take a look at those, make sure they're not too high or too low. Those will affect the premium. I think we'll talk about those here a little bit more later. The ones that really jump out to me would be your sales and operation. Your general liability premium is a direct reflection of your sales and your operations. So if there's been any change in sales, and I know right now it's crazy and there's different pockets of the country are seeing different results, but if your sales are way down or down, say over 10%, you might want to have that conversation with your provider, because that could be affecting your premium. You might be paying premium you don't need to be paying. And same with payroll. Your payroll fluctuates, so does your work comp premium. Those are going to go hand in hand. Broker commissions, we've already talked about that a little bit. Those certainly affect the premium depending on who you're working with. Those are the ones that jump out to me besides your typical loss history. Whether if you're in Miami, you're going to be paying more than, say, you're in Wichita, Kansas, for example. Those are pretty self-explanatory.
Gotcha. And Laura, what happened when you were still either operating as a franchisee or working with some existing clients?
Yeah,
what's a good example?
We were prepping for this meeting, and this came up in our conversation, didn't it? We had a customer that we reviewed their policy and for them as we were doing the quote, and they had earthquake insurance and they'd been paying for it for 10 years. And we kind of dove into it a little bit to figure out why, and the insured didn't know. The lender didn't require it. The landlord didn't require it. And this was just, the broker never caught it. And it was insurance that they had, that the carrier, whoever put it on there, and it was wasted money that coverage they didn't even need. So it's important to look for those things to make sure that there aren't little sneaky things in there that you're getting charged for that you really don't need. And to echo what Ed said too about the payroll and your operations, basically if you have a high volume store, that's going to drive your premium. You're going to have more people in there, more risk out there for someone slipping and falling and things like that. So, and conversely, with it going the other way, your premium will reflect that as well.
Yeah, I think it really depends on what sector you're in, right? So if you're in QSR where your sales are up, or drive-through where your sales are up, you might be underpaying and you might get hit with an audit premium at the end. And if you're in, fine dining or even casual dining and your sales are down, you're paying for things that you don't really need. So it's really important to stay on top of it during the course of the year so that you're paying the right amount. Does that make sense?
Absolutely.
Yeah, I would add one quick thing up under coverage limits. We've seen a few franchisees that came to us for insurance, and they were basing everything off of their FDD, and come to find out that FDD had property limits that were very, very low. After talking through it and looking at construction costs, talking to other franchisees, we lifted those up for them so they were properly insured. And yeah, it costed a little bit more money, but at least at the end of the day, you're going to have adequate insurance. So it's important to kind of keep an eye on those too.
Insurance is one of those things you're paying the premium and hope you never need it, but when you need it, you want to make sure you get the right amount of money. So
right, yeah.
You want to just make sure it's checked for accuracy, and details matter. That would be a takeaway from here.
Mm-hmm.
So let's talk about what coverages you need and what some that are not quite essential in the world of essential and non-essential in the new normal. Ed, why don't you help us along with this one?
The new normal. I don't think we know exactly what that is yet, but yeah, I mean, most people are going to be familiar with a lot of these on this slide. Property, general liability. I think everybody's probably seen those crazy farmers commercials That's where those would come into play, your slip and fall, accidents, fire, tornado type stuff. Umbrella, not every franchisor requires it. We definitely recommend that you have it, at least $1 million basic layer. Two things there. One, the bigger your operation gets, the more you want to focus on that umbrella. You're going to have more moving parts, more exposure out there. And the umbrella market's changing right now. Pricing's going up quite a bit. We're getting a lot of phone calls that people are getting significant increases last minute at their renewal. So again, going back to starting the process early, that's probably a coverage to focus in on, and maybe talk to some other providers about options, even if it's bundled with other coverages. Auto, we all know what that is. Workers' compensation, self-explanatory. Hired and non-owned auto. That's a pretty important coverage that doesn't get talked about a lot. That's going to extend your company liability when your employees are using their personal vehicles for work. So two examples would be, you have a store manager who's going from store to store throughout the day and has an accident, or maybe that store manager at the end of the shift's going to the bank and part of their daily routine. Well, those would be considered business functions. So if they have an accident, the way it would work is their personal insurance would pay first, and then your hired and non-owned auto liability would sit on top of that, almost in an excess layer. Without this coverage, you can really get hung out to dry and be on the hook for quite a bit of money if it's a significant accident. And just real quick, kind of a hot button of mine on this coverage. If you have a lot of moving parts and you have employees using their personal vehicle, go ahead and run their MBRs on an annual basis. Make sure you have copies of their insurance. Those are all things that kind of tidy up your operation without leaving any coverage gaps. Cyber insurance, that's becoming more and more important. We've all seen it, whether it's phishing or hacking or, I forget the name of it, where they lock your screen up until you pay a ransomware. It's important to have even just a basic layer of cyber insurance, and then build on that as you learn more. Employment practices liability, or EPL as we like to call it, that's your hiring, firing, harassment, discrimination coverage. That's probably more important in today's world than it ever has been. We definitely recommend that you have that, and you know what it means, and you've had that conversation with the provider, making sure it's adequate from a limit standpoint. And the other ones are really depending on your size, operation, where you're at. Those could or couldn't come into play.
Gotcha. Can you just, for those of us who don't speak insurance speak, you said run their MBR. What does that mean?
Yeah, the motor vehicle reports, that's just going to give you a snapshot of their driving history.
Right.
It's going to tell you if they tickets and that type of.
Yeah, I didn't know. I never heard of that acronym, so I assume some of the others didn't. So my job is to translate insurance to English on this, I guess. Awesome. So let's move forward now. Let's talk about how much coverage you really need. And Laura, why don't you take the lead on this one for us?
Sure, happy to. Your franchise disclosure document, the FDD, usually has outlined in there a lot of the coverages that you need that cover your liability exposures. And that's really because the franchisor wants it to make sure that you're adequately covered so that they're not drug into anything. But aside from that, they really don't tell you how much you need to insure your building for, or your equipment and things like that. And so those values you either need to have, if you've built that unit yourself, you know those numbers. You've obviously equipped it yourself, so you know those numbers. But if you didn't, and you have a landlord that's involved, and the landlord has a lease with you, they have a document that 99% of them will have an insurance requirement in there that will tell you what they need you to insure that building for. So there's a few documents out there that we need to look at, and your insurance provider should be looking at this or asking these questions to make sure that they're giving you the coverage that you need to stay in compliance with the contracts that you have in place with your franchisor and or a landlord that might be out there. You guys don't need to be experts at this. This is what the insurance companies do. So don't be afraid to share these kind of documents with your broker or with your provider, so they can review these things for you and tell you if you're underinsured or not. Or if you need to increase coverage in certain areas. The other good thing too is that when you come up with your building values or your equipment values, the contents, you know, providers know kind of where these numbers need to be, and so they can help you as well, you know, figure out what they've been seeing for the average industry average. You know, and I think we've got a lot of numbers on franchise restaurants, and so we sort of know what the numbers should be coming in at, and what is a comfortable range for you to keep your business insured at the appropriate number, so that you're not underinsured at any given time.
Gotcha. And especially in the world of triple net leases, it's really important, right?
Absolutely.
Yeah. I just want to give a shout out to someone on this webinar, Carolyn. It's great to see your name. We need to catch up by phone. I'm happy that you joined us. This is one of my most fascinating takeaways that I've learned. You know, when you spend $100, where does it all go? And how do the insurance companies make money? And where is the money, you know, allocated? So out of every $100 you're paying, 50 to 55 of those dollars are actually used to pay claims for you or someone else. So for all those years you had no claims, someone else was using that. And that's the whole idea of insurance, is to pool risk amongst like businesses. The $15 to $20 would go to the insurance company's G&A. That's the cost of running the insurance company. And then the company profit is the insurance company's profit that they need to make in order to stay in business. And then $15 to $20 of your 100 are going to your broker. So it's just fascinating to me. I'm a finance guy and a numbers geek. Ed, what would your add-on to this be?
I love the slide. You know, I don't think there's anybody out there who doesn't, including myself, when you write a check to the insurance company where it's going, this does a great job of explaining it. This is going to reflect, you know, almost every insurance company out there. And, you know, the takeaways that I see here, the company profit's only 10%. You know, a lot of that depends on the stock market, investment income, social, you know, the social aspect of the jury decisions right now keeps going up, social inflation. You know, the worry, where can I save money? I see your note down there. You know, if you're looking around, you're going to find maybe a little bit less premium here and there, but there really is commission. I mean, 15, 20% is a chunk. It's a good spot to start looking. Can you look at an alternative provider? Can you go direct? Can you find somewhere else to save some money there?
Yeah, absolutely. It seems like the actual insurance cost is what it is, and the variable is the commission to the broker. That was my takeaway anyway.
For the most part, premiums are going to fluctuate from company to company depending on their appetite and their expertise. But yeah, you're right. You're exactly right. That's the biggest chunk of it.
Yep. And then the $50 to $55 is going to vary based on if they have concentration. Anyone who has a lot of concentration in Louisiana this year got killed financially, both the businesses and the insurance companies. So let's go to the elephant in the room. Coronavirus. It's in everybody's thought process. Every other thought seems to have something to do with it. Ed, can you kind of explain why it's not covered and what the future holds to the best of your ability?
Yeah, so I know it's been a challenging time and frustrating for a lot of people, including myself. So really, high level, the reason it's not covered is, number one reason, just the uncertainty. Insurance companies need to be viable for the long term. And with the pandemic, there's just too many unknowns, and it's almost impossible for an insurance company to underwrite and collect the right amount of premium for a global pandemic or something along those lines. You know, it doesn't mean there's not going to be solutions in the future. I know at Intrepid we're watching it, and you know, maybe similar to 9/11, there'll be a government-backed program or some type of relief for insurance carriers at some point. But that's it really at a high level. If you talk about the policy level, it needed the business income needs property damage trigger, and from what we're seeing, there is no actual physical damage to the property. And I know that's debatable. I'm just letting you know what's out there in the news right now. But that, in a nutshell, that's why it's not covered. Did I answer your question?
Yeah, it answered it. It's probably not the answer anybody wanted, but it's always good to understand why things are happening instead of just hearing a no. Laura, why don't you talk the rest of the, this used to be all C's, but we changed one of them to an L. I called it.
Sure. I think, we've touched on the cash flow. Are you paying for insurance that you don't need? The other thing that, for the cash flow to think about is, the payment plan on that. So is it 12 equal monthly payments? Is it 3 months up front followed by 10? I mean, there's all different kinds of ways to do it. Obviously that in fact affects your cash flow month to month. The thing to look out there for, and I think we touched on it, was the finance fees and hidden fees and things like that. So I urge you to challenge that or to seek out providers that don't have those extra fees hidden in there. Really, there's not a good reason to have to pay for those if you don't need to. So we've talked about the coverage, things like that. The last three there, the claim mitigation, that's a big one. That will help you out, obviously, to reduce the amount of claims you have. Are you doing things like cleaning your hoods on a regular basis? Do you have anything that's automated for oil procedures? I'm talking about hot oils and things like that, things that cause claims. All those things add up, obviously, to your loss runs and losses that you have. And so when insurers looking at your portfolio in order to underwrite it, they're assessing how well of how good of an operator are you? Are you doing things to mitigate these kinds of losses? And even if they haven't asked, be forthcoming and tell them what you've done. Tell them if you've had a claim that was a severe claim, that you've done this is your new practice. Don't be afraid to share that kind of information with your insurer. It helps tremendously. The liability exposure, we talked about that as well, especially with COVID. A lot of dining rooms are closed. What's the percentage of your drive-through versus dine-in? Do you only have 5% of the people walking through the front door? Please volunteer that information as well to your provider, because that does make a difference with the risk that's involved if we don't have people walking into your restaurant. You don't have the slip and falls, you don't have those kinds of claims out there. So make sure you share that. And then, the last thing, obviously, with the social distancing, nothing new on that. I mean, we all live social distancing right now. So, just sharing those procedures with your carrier. Again, just letting them know what kind of operator you are, the better that they understand you and think of you as being a good operator, and that you're doing everything you can to mitigate claims. It's only going to be in your best interest in the long run.
That's a great explanation. Thank you very much. So what should you consider important, going forward in terms of choosing a provider, and what are the important buying takeaways we can give to the group here? Laura, why don't you take this?
Sure. We don't want to sound like a broken record here, but I think, you're looking at, people that have an expertise in your industry. A lot of carriers dabble here and there with restaurants, and they try to fit you into a box. We're on the right slide, Ron. Sorry.
It's not good. It just moves on its own.
A lot of carriers, they dabble in different industries, and they try to fit restaurants into a certain box, which may or may not be in your best interest. And so to have an insurance partner that understands exactly what drive-through percentages mean is in your benefit, obviously. Ed talked about bundling coverages, having things all on one policy. You have one renewal date, things like that. We talked about the cost with the payment plans, several times. Watch out for those hidden fees. Watch out for finance charges and things like that. Look for providers that don't have those kinds of costs in there. And then I touched on at the very beginning was look for, a provider that has the financial integrity to be there, because sometimes the cheapest is not always the best, and you want your provider to be around for a really long time. So those are just some of the key things when you're researching somebody. And I would add to, just personally, you want a provider that's going to look out for you. at the end of the day. And that's easy to work with and it's transparent. It doesn't need to be a game. It doesn't need to be last minute stuff. It doesn't need to be a race to the finish line. It needs to be somebody who picks up the phone on the first ring.
Yeah, I agree. And to me, having had owned businesses over the years, it's when you have a claim that the company really matters. And running a big claim, if you have a hurricane or a fire or a flood or whatever, it can really distract you from running your business. So having an insurance provider that will really work with you rather than take an adversarial role is very, very important. Ed, do you have anything to add?
We've throughout this whole, COVID period, we had a lot of phone calls or inquiries about, when we bind coverage with a new client, how do I pay? Can I use a credit card? We do accept them, and it's helped a ton of people defer those payments off 30 days. A lot of people, and I think, Ron, you have a buddy who collects a ton of these points, but a lot of people like the points too when it comes to the credit card. That, ask if it's an option. And if it works for you, it's not going to be for everybody, but if it works for you and something you want to do, that is available out there with certain providers.
Everybody likes credit card points. We're all addicted to them. So, and just before we're going to begin to wrap this up in the next couple of slides. So if you do have questions, we got a couple that I think we answered in due course. Please type them into the Q&A. What is your action item? First thing is review what you have and make sure you have what you need. You don't want too much. You don't want too little. You want to have the right amount of insurance. Look at your limits and your exposures. If you have lower payroll, call your broker, call your contact. If anything's changed in your business, you want to be proactively communicating that to your insurance provider. Going back to what Ed just talked about, being able to finance your premium with no charges and put it on a credit card can really help your cash flow, provided you pay the credit card off, obviously, and give you the benefit of whatever rewards you wanted to have. And, if your broker is not calling you, quite honestly, and hasn't reached out to you during this period to find out if you're doing okay, you should consider changing that. I mean, your business has changed. Everybody's business, during COVID has changed one way or another, some for the better, some for the worse. And, insurance is based on last year's results. So if your results of 2020 are different than they were in 2019, then you have probably the wrong insurance. You might have too much, you might have too little. So if they haven't called you, then they're really doing you a disservice, in my opinion. So with that, if there are any other questions, please type them in. This is a link to the landing page. Again, all of this is going to be coming out to you in the recording of the presentation. And Bobby, we will reach out to you very quickly. Somebody's asking for contact info as they're up for renewal. Thank you for giving Intrepid a chance to earn your business. I appreciate that. And I don't see anything else that I can see. Ed, Laura, do you see anything?
No, I can tell you one that normally comes up would be if I've added multiple units over the course of a couple of years, and now I have 3 separate policies, 3 separate effective dates. Can we combine that? And most of the time, the answer is going to be yes, even if they're different brands. You're going to want to do what's right for you, and that's what we do, is try to make it easy. But some of those, and I get that question a lot. Usually it can be consolidated, one simple policy, one bundled coverage, 12 equal payments, and that kind of takes all that insurance stuff off your plate so you can run your business.
Yeah, I think you really just want to have a partner that understands your business and can let you run your business, and someone who has your best interests at heart. And it works that way in finance in our business too. We treat every potential borrower with, what are you going to do with the next 5 or 10 units, not with the next 1 unit. We're not here to be transactional, and neither are you. We're both here for relationships. And that's why we kind of teamed up.
Yep.
So I don't see much else coming in. I want to thank you all for your time. And please, give Intrepid a call, or at a minimum, call your existing relationship person and make sure you have the right coverages. If that's your one takeaway from here, then we were successful. Thank you all very much. Have a great day and the rest of the week. Take care.
Thank you, Ron.
Thank you.